financial institution into DeFi and on-chain management. So investor dilemma, what do we hear at Belém Capital from our investors, from institutions? First, they tell us Bitcoin is too volatile. Well, it's true. For you and me, it's okay. We can manage 50% swings and drawdowns. But for a financial institution or bank, they can't manage this kind of drawdowns. So how do we solve this? By doing DeFi with stablecoins. Okay, when you do DeFi with stablecoins, you have a very stable yield with less than 4% volatility at Belém. And this is a perfect product for institutions. Second, they tell us that ETFs are directional. Again, it's true. If you buy IBIT, for example, you are exposed to the Bitcoin volatility. And another solution is to do DeFi with stablecoins. Less than 4% volatility, this is a perfect product for institutions. And finally, they want to invest in an environment they know. They want to invest in a vehicle they understand. So at Belém Capital, we chose Luxembourg with the CSSF, but you have Switzerland with FINMA, you have Cayman. You have many places where you can set up a vehicle that are accepted by institutions. So the idea is to set up a regulated vehicle with high risk management standard, and the underlying are DeFi strategies. I will let Nassim now continue, but one last slide. Here I wanted to show that the growth of RWA started with approval of the ETFs by the SEC. Approval of the ETFs was the green light for institutions to dive into crypto and into DeFi in general. So all of this started in 2024, and big institutions are coming now, and we see them coming more and more with Belém Capital. Nassim, I think it's your turn now to dive more into risk management.
Yes. So hello everyone. I'm Nassim, so CIO at Belém, also having a TradeFi background. Big Four, mainly on risk, and started my asset management journey with like when DeFi was booming and was mainly helping Web2 and Web3 startup to manage the treasury. But that being said, so how we moved from this Web2 and Web3 startup managing their treasury in DeFi to institutions and all these large banks that are like, okay, we want to have this alternative exposure, but how does it work? Today we have RWA, but why do we have that little, I would say, size of RWA? When I say size, it's not in TVL because it's growing pretty well, but it's mainly in diversification. Like everything started with private credit, but now we have way more different share classes. And the main problem is not how to tokenize these RWAs, how to underwrite them. Do we have the right teams that are most like really often DeFi and crypto natives to be able to completely underwrite this, check the data veracity, how the legal and the jurisdiction could be enforced, the cash operation, valuation, reporting. So this is quite, I don't want to say new, but the team are scaling up to be able to underwrite all this. So the main bottleneck here is more the underwriting than the tokenization, because RWA that is not properly integrated in the DeFi ecosystem doesn't add much than just the RWA by itself. Like you just tokenize, you just added basically a layer of complexity that is blockchain. But what matters is how is it integrated. I'll just probably stand up. But the underwriting pipeline here, and what is quite important is you have 7 pillars that needs to all be respected. So from the first one to the last one. So of course you have some frictions between them, but the idea is how to go through all these steps and make sure that all these checkboxes are actually checked without any issue. And here you have at each step a world where the capital can get stuck. So how to underwrite that risk, and basically what's the stack and how we can do it, because On top of saying, okay, we have to underwrite the risk, is can we underwrite it? Do we have the capacity and the capabilities to do it? And that's what at BLM we're building and working with all the largest bank and largest RWA issuer. So as you can see, I mean, I will not mention all of them, but for each of them, you have at least 3 points. The main one is credit market and liquidity. So you need to have models on the liquidity. How do I monitor this liquidity? How do I assess my credit risk for private credit, and so on. And these goes for the legal, the data, the counterparty, the risk monitoring, the valuation nav, and so on. So once we said all this, which means we know how to assess our risk, we know to underwrite it. But when you do this, you basically just have a snapshot of the risk at a T instant. As we know, crypto is moving and moving fast. Blocks are often mined every second, to not say even faster sometimes. So the risk assessment I have today is probably not the same I will have tomorrow, in a week or in a month. So our challenge is, how can we move from a snapshot assessment to a real-time monitoring? So to make sure we always master and control our live exposure to the different underlying, and is this underlying actually moving? Is there any breach at the smart contract level? Why I'm saying this, if you check, for example, maybe you heard about it, like the last incident we had last weekend with Resolve, there was no issues at all with the backing assets. Like the point of failure has been the smart contract itself, which could be true for all the RWA actually. Like you had to have a private credit where everyone is like focused, is this safe or not safe? It could stay safe while at the smart contract level you have an issue and it end up in the same problem. So all this is linked to the real-time monitoring, like the event audit trails and how we track all this event happening. That being said, what does it mean? What does it mean exactly in terms of operation for us? So here, so you have the risk order flow with Hypernative mentioned by Stan just earlier. So we have live monitoring and signal by our third-party services that we work pretty closely with. I don't know if those, well, just by raising your hand, anyone heard about Hypernative already? Or is it like first time? So what is it, Hypernative, quickly for you? Is a solution that lets anyone who is subscribing to their service, according to how you basically set the parameters, to listen to what's happening on chain and at the fraction of second it's happening. So if someone is meeting a large supply of USDC or USDT, you can be informed in real time even before it gets actually minted on chain. So sometimes when a hack is happening, you have like a small window of, let's say 10 seconds before it's really happening, but we can get the alert ahead, so we can act accordingly. So how it's working, once we said that, so we got the signal from Hypernative, we got the detection, we have our policy engine, so saying this is a threat, so we just execute and this is automated. I don't have to wake up at night, like we said, we like to sleep, so everything needs to be properly done ahead. The action is like only allowed to do this, which is for example, withdrawing from a certain protocol, selling at a certain slippage, something like this, and then it acts. So all this is fully automated thanks to the Hypernative integration. And then how we do offer all this with BLM to the institutions, because what matters for them is, first of all, you can think about it's the performance in DeFi and how they want to expose themselves to DeFi, but not specifically. They really want to make sure the risk is mastered, and not today. It will be tomorrow, in a month, in a year, and they will keep always the same risk exposure. If you basically, the performance was 12 and the realized performance is 10, you can always explain yourself, or you can justify why the performance has been 10 and not 12. But if the risk explained when you sold the product or you onboard them was A, and in practice the risk they're taking is like B or C, then it's another problem that you have to explain to the institution. What matters is how they master the risk they're they're exposing themselves to. So for all this, we have the institutional LPs, we have the Luxembourg fund, and all the funds then are managed at the strategy level and fully on-chain 100% on our MPC custody solutions. So we have the risk engine, the policy engine, and the monitoring, as we said, which is this 24/7. It like just never stop, even as we speak. Here it's always running. And then the on-chain layer. So all the DeFi application you know. Then we have our reporting and nav, and we have the audit trail before it goes to the institutions. So that's mainly it, and that's how we onboard them and how they're literally reshaping DeFi. By reshaping DeFi, what matters is, thanks to this institution, they're just raising the bar for the retail, even though you're not aware, but because everyone wants to get their institutional money and institutional inflow, everyone has to raise the bar in terms of risk management, in terms of how we do offer them the exposure, how they can just manage all this, and all this is transparent and not kind of upgradable by one entity or one single person or one single address. So thanks to this, the old DeFi is actually, I think, gonna be better, and it's already getting better. So thanks. I mean, thanks for listening to us. I will let the mic to Stan if he wants to conclude with something.
We have time for Q&A.
Yeah, probably have a few minutes if you have any question.
Yeah. Hello, thanks for the presentation. How do you handle the due diligence by the institutional investors?
Hello, I don't know if you want to, or you want to take this one?
You mean the KYC we do on our investors? The due diligence process by the investors. Well, we have again installed institutional standards. So we have a full data room that is fed by administrative documents. So for the fund, we have the term sheet, we have the PPM, we have the LPA, we have all of these legal and administrative documents that are very important for institutions. After we have more technical documents, so we have a DDQ document that is 40 or 45 pages, thanks to Nicolas here, that is very precise on our strategies. We define our risk limit. But the main point that those clients want to look at is the separations and the Chinese rule between risk management and asset management. I think DeFi 5 years ago, when we started, was, I mean, the asset management and the risk were kind of in the same team, working together. And what is important when you work with StratFi people is to show that the risk is not the friend of the asset manager, and the risk is really controlling what the asset manager is doing. This is important for them.
I'm just curious. When I make a trade, I go into Rabbi and I do it manually, old-fashioned way. I'm gonna guess you're a little more sophisticated, but I'm just curious. How do you actually make a trade? You mentioned Fireblocks, and you know, maybe I could make 3 trades in 7 minutes. I don't know. It would take a while. I'm also wondering, like, how fast can you actually? What's your throughput? Like, could you do 1,000 trades in a minute?
I mean, we can. Like the real question is more, what's the trade? If we're sending money, we have some risk threshold. For example, there is on our side, no asset manager that can directly operate a trade alone. We always have a double layer check. So you have one asset manager that will initiate the transaction. Then you have a second one that will approve it. And on its approval, it's like a multi-sig if you're familiar with it a bit. So a trade could take time, but most of the time we don't have to be an emergency. And then you have some function at the smart contract level that could be whitelisted, like just a withdrawal. So there is no kind of slippage. You're just exiting the liquidity from a specific protocol or smart contract here. And this is whitelisted in case of emergency. An asset manager alone can do it. And then the funds are just basically idle. To go back to your question, how do you execute it? We go through the MPC solution, mainly for DeFi. And by design, we cannot do anything. We have to whitelist all the action we can do. So that's how we trade. Let's say we want to swap, like you said, through on Rabi, let's say you will use CoSwap or Uniswap or some Curve. Then we have to whitelist Curve or Uniswap. Then we have to whitelist the asset we're going to swap and the asset we're going to get. And the max slippage, the function, the chain, and so on. So that's how we operate.
Thanks a lot for this very interesting presentation, but we have to end it. I invite you to ask more questions outside.
Yeah, with pleasure.
And thanks a lot.
Thank you very much, everyone.